Hello everyone, very happy to see you all here. Today we're going to discuss the UK CPI data, which will be out in about 10 minutes, and me and my colleague Max will be glad to discuss it with you. So as you can see at the current moment, the forecast for the year on year stands at minus 0.1%, and the prior figure stands at minus 0.1% respectively. So if we will continue discussing what actually happened, so the annual rate of the CPI slipped 0.1% below zero in September. The Office for National Statistics said the largest downward contribution came from petrol prices falling by 3.7 pence per liter between August and September this year, compared with a fall of just 0.8% per liter between the same 2 months a year ago. But petrol prices stabilized in October this year, falling only 2 pence per liter from September's average, which is exactly the same amount of price fall seen between September and October last year, according to the the AA Fuel report. Given that the price of petrol has recently been among the largest movers, we may expect a neutral impact on the annual rate of CPI to either remain unchanged or to rise slightly up to zero in October if all else stays equal. The sterling price of Brent could increase 1.5% to 32.1 pounds per barrel between September and October this year, but fell 43% when compared with October last year. The effect of oil price fall on the annual rate of CPI inflation is set to dissipate early next year in what is called a base effect, meaning that when comparing low oil prices in the corresponding period of the previous year, even a smaller rise in the price of oil next year will automatically see a higher rate of inflation. According to the British Retail Consortium, UK shop price deflation slowed in October, but the deflationary forces are expected to remain all the way through the end of this year as supermarkets and other high street retailers continue to wage price wars ahead of the festive season. Supermarkets will be working hard to get sales going again, as intense price competition is having a deflationary impact on the overall shopping basket, according to the BRC. Okay, let's move on. And I would like to share with you traditionally top 10 economists surveyed on the matter according to Bloomberg. And as you can see, according to their views and projections, we have the Bloomberg survey summary, where the median estimate stands at minus 0.1%, average estimate stands at minus 0.09%, high estimate stands at 0.1%, and low estimate stands at minus 0.2% respectively, whereas the number of estimates this time has reached 34. And I guess last but definitely not the least is the Dukascopy community members poll on the sterling dollar. Of course, currency pair, and as you can see, the traders went rather bearish this time, 61.11 bearish votes versus 38.89 bullish. And we have a couple of comments by our community members, Sonia Trader, of course, and Freeman, if I'm reading it correctly. He says that the pair is in strong uptrend, and the chart reflects economic growth, and the UK is showing a lot of prosperity. Though the CPI values are down, and the pair also dropped, but found the low at 1.5060 and has a rebound back up. So the CPI value should also rebound, since the market has been rallying after every dip, and thus he is bullish on the on the release. Okay, I guess that pretty much covers the fundamental part of this economic data release, and I would love to invite Max to cover the technicals.
Paulina, thank you very much. Hello, everyone. I hope you have a great day, by the way. So yes, we were discussing the UK CPI data, as Paulina has just mentioned. And since actually there is a neutral forecast for aggregate neutral forecast for this data release, we were first of all undecided on the trading strategy today. But looking deeply at the Bloomberg survey, we can see that many forecasts still suggest that the CPI can even fall below the minus 0.1% reading we have seen in September to decline down to 0.2% in October. For instance, such expectations are projected by Danske Bank and by Nomura Securities. And therefore, we finally decided to take the negative surprise trading strategy today and discuss it right now. Also because the sterling dollar currency pair has a very strong negative sentiment right now. As you can see, more than 60% of all open positions are still go short on the UK currency. And the UK currency is also being sold in the majority of all its cases, if we take into account all the currency pairs where the pound is trading. Concerning pending orders, they also remain on the downside right now, so the majority of them are set to sell the sterling versus the dollar in both 50 and 100 pip range from the spot market price. Speaking about the market sentiment provided by other market participants, we see that Oanda and Saxa Group traders are also remaining bearish on this currency pair, while daily forex traders preserve actually their bullish view on the matter. But as you can see, they are the only ones today who are bullish. Okay, if we move on to the current trading situation of this currency pair, we see that it is trading at 151.74 level, and of course, as usual, to project the possible market reaction after the data is released in around 3 minutes from now, let's have a look at the previous reactions for the cable, which took place since June to October of this year, and the reactions actually ranged from 21 pips in September up to 47 pips in August. But the average reaction was 33 pips. At the same time, I also should note that when the data was actually published in line with expectations, the reactions were usually softer than average. For instance, in July and in September, the average reactions were just 25 and 21 pips respectively. That's why, since we have the no change expectation today as well, we will also be conservative and we will project around 20 pip reaction after the data is released in around 2 minutes from now. By the way, we can also see no reaction at all. It depends on how market participants will see the data in the context of the Bank of England's rate decision next year. The first take profit level at the moment is placed at 1.5150 level, which is some 24 pips below the spot price at the moment, and this support is strengthened by the daily and 4-hour S2 support lines today. At the same time, if we see more negative surprise from the UK, we can also expect a stronger reaction, possibly a decline extending down to the second take profit level, which is the 4-hour S3 support line at 1.5138. At the same time, we cannot also exclude the positive surprise, since the gasoline prices have stabilized somewhat in the UK. If it happens, we also can see the sterling dollar currency pair approaching the 1.52 area as well. I guess for now we have just 4 to 5 seconds to go, and I will just mention shortly the technical indicators for the cable. And as you can see, the vast majority of them are pointing downwards on almost on all time frames except the 10-minute ones. So actually we can count on two hands the buy signals, and it will be enough. So the majority of them suggest that the pair will decline both in the short and the long term. Okay, I think we just have some couple of seconds remaining till the data will be released and will be published in the chat section. I hope we will see the numbers on the headline inflation, on the core inflation, and on the month-on-month basis as well. Okay, we see some upward actually reaction from the sterling because yes, it is actually a very big surprise from the data because the actual CPI grew above 0% to reach 0.1% in October, even though it was expected to decline. It was on the month-on-month basis. Yes, it increased by 0.1%. At the same time, if we have a look at the inflation on the annual basis, it is still losing value, let's say. So it is declining by 0.1%. I think the main surprise came from the CPI inflation. As you can see, the reading rose by 1.1%, inching slightly closer to the Bank of England's target of 2% inflation. It's still well below this reading, but nevertheless, it is better than expected. So the average survey said that the core inflation will be just 1% in October. So from that point of view, it's a bit of upward surprise, and therefore we see some positive reaction on the sterling dollar as well. So the first minute reaction was some 23 pips to the upside, actually matching the average reaction of July and September, as I have said, when the data was published in line with expectations. It is when we speak about the headline reading, which was released in line with estimates. Okay, I guess that for now that will be all from my side as well on the technical part. For now, we will also have today the second data release, so don't miss that. We're going to discuss the US inflation data at 1:30 p.m. GMT. So feel free to join us at that time. But for now, thank you very much, and I would like to give the floor back to Polina.
Thank you, Max. Yeah, we can still see the reaction on sterling dollar 1 minute chart, and the month-on-month data came out in line with the expectations, yet better from the last release. And we have the yearly CPI at pretty much the same where we've been. Okay, I guess that's no shock there, and definitely stay tuned because we'll have a webinar by Liquidity on intraday trading, and then we will continue with the US CPI coming out in about 3 hours or so. Basically at 13:20 GMT, your team will be here back. Meanwhile, take care, see you soon, and enjoy the webinar by Liquidity.
Good morning, everyone. All these important levels that I've been mentioning in my last several webinars getting approached and tested.